Well, let's break down this beautiful trade I took on gold. Those beautiful trades I took on gold, both position I took both position on 1 minute time frame. But to break down those trades, we need actually to go back till 1 minute time frame. So that's exactly what we'll be doing this video. I want to break it down for everything, so you guys can actually understand every single step, every single entry, every single stop loss. And let me just be transparent here, okay? I took 2 trades. Those 2 trades are running right now. Those 2 trades just hit take profit yesterday. Has caused the gold to made a new all-time high. The first position was a 1 to 19.51% risk reward. The second position was a 1 to 15.48% risk reward. So in total, I made over 30% for sure. But in order to catch those 2 positions, I actually took prior to take those 2 positions, I took I had 3 stop loss on gold. So 3 stop loss in 2 trades that, was good and run it. I let it run till I made 19 and 15 risk reward. Okay. So 3 stop loss. I actually took 5 stop loss, but the other 2 was on NASDAQ. On this trade right here, I have running right now on NASDAQ. So I took 2 stop loss before actually being able to, grab this position and hold the deal where it is right now. And I'm holding it. I expect to holding it till it reach this level, but I don't know if it will be possible. Okay. Maybe with the beginning of the London session, on Monday, I ended up closing this trade, but for now it's running also well. But we are here today to talk about the gold trades. You guys can see right now on the screen, the both trades where I took it on 1 minute time frame. Pay attention to the image. Okay. Pay attention to the image. See how the price is moving, going down, and then I took the first trade and then I took the second trade. Pay attention to this 1 minute time frame. Why? Because from here and beyond, I won't share the 1 minute time frame entries on my trading view anymore. Period. I'm not sharing it anymore on 1 minute time frame. But I will always show to you guys the entries on 1 minute time frame on my MetaTrader. So why? So you guys can see where I actually took the trade. Right? So I'm not just saying, hey, I took the trade here, I took the trade there. No. I am showing to you guys where I actually took a trade. Also, you guys are watching right now the trades running on my MT5 here. Right now, I'm trading with MT5 because my MT4 is running my algos, my trading bot, whatever you want to call it, EA expert advisor, whatever you want to call it. My MT4 are running right now my algo, and since I discovered that on MT5, I can set up also stop loss and take profit levels with my phone. So I decided just to switch to MT5 anyways, because it's a better platform and we have more function on phone. And it's important also, right? So especially for everybody that want to trade on the go. So yeah, pay attention to the trades that are running right now on my MT5 and see where I exactly took the entries. And you guys can also see that it's a live trade account. Pay attention. It's a live trade account. Don't pay attention to the amount of money I'm making because it's nothing. The more important thing is the knowledge that allowed me to make this amount of money. That's the most important thing, not the money itself. And as I said to you guys, I took 3 stop losses before being able to catch those 2 trades that are running right now. And you guys are watching right now on my trading view running exactly right here. Sorry, the trick profit's already hit, right? I'm always saying the trade is running, but it's closed. It's a closed position. The thing is, think about it. How many of you guys would get, your stop loss will be hit 3 times and you will be totally devastated. You will be totally emotionally triggered. And that's a bad thing. And another thing very important to say is, I see a lot of people, a lot of traders, a lot of beginners that come to my YouTube channel. They start to learn my strategy and they try to apply it. And they get some stop loss and they instantly say that my strategy doesn't work. Well, that says a lot about you, not about my strategy itself. That says a lot about you. Fifth, you are a beginner. I mean, this says 2015. You came here, I don't know, with 1 year of experience, 2 years of experience, or no previous experience at all. And you want to have like crazy strategy, crazy assertiveness. And that's literally impossible. Literally impossible. Because even me, out of 5 trades, right? Because out of 5 trades on gold, as I say, I took 5 stop loss, 3 on gold, 2 on Nasdaq. I took 5 trades in total in gold. 3 was stop loss. 2 was what? Was take profit levels hit. As you guys can see right now, my trading view, and I will show you guys everything that you guys need to know. Everything, every proof. So even me, I started to trade back in 2015. I'm still having like, in 5 trades, I was able to hit take profit on 2. So 40% strike rate, 40%, right? Because on the other 3 trades, around 40%, not exactly 40, because, you know, it's on whatever. But it's important for you to pay attention to that, because stop losses are part of the journey. They are just part of the journey. They are as important as take profit, as break even, and everything else, right? With all these monologues, this motivational speech, this wake up speech maybe for you guys, let's start to actually go into the chart. Well, we are on gold. Let me go to the daily time frame, because maybe things become more easy to understand. If you're watching this and the aspect ratio of my video is different, that's because I'm recording this on a ultra wide monitor, and you want me that I just bought, so I feel that I need it. So if the aspect ratio is different, that's because I am recording this on an ultra wide monitor. Okay, I hope it's not. Well, fifth thing, we need to see that we need to pay attention to this. This is the previous all-time high of gold. Okay. And then price made this retracement. But before of that, we have so much movement, so many, sorry. And one of the one that actually grabbed my attention was this one. The other one, I was expecting the price to come back to it, but you know, they maybe wouldn't. But this will catch my attention. You know why? Because since price made this push from this low right here to this high, we made this little retracement here, and then we start to go up, but the bullish strength wasn't enough to actually, you know, break structure and make a new all-time high and grab all the liquidity of those highs. My idea was, okay, maybe we'll do this move and then push down again and tap on this zone, and from here we can start to go up again. That was my first idea. Well, as we saw, it ended up never happening, and I will explain to you why very soon. First, I have a lot of elite zones that I refined along the way. One of it, this right here also is a elite zone, exactly right here, as you guys can see. I didn't put the caption on it, but it is. And we have another one right here, whatever. Let me go to 4-hour time frame. On 4-hour time frame, we can understand better what was happening on the market at those levels. And one thing that is important is, well, since price made this huge push to the downside, you guys can see a lot of consolidation. Then we swept all the liquidity on those lows before start this bull run, right? So liquidity on those lows were swept when price made this push to actually start this new bull run, right? With that in mind, I know that, okay, we don't have any liquidity here, but we may have some point here that price may want to come back to actually touch it. And that's exactly where I got the zone that I told you guys catched my attention, right? So this zone right here, on the daily time frame, I can refine it to this has a late liquidity in this intermediate zone. But at the end of the day, what ended up happening is price never came back. And you guys can see that on 4-hour time frame, I refined it even more, right? Price never came back here. One thing that catched my attention again was, okay, so if I'm like expecting price, okay, I was talking about this one actually, sorry, not this one right here. So if price started push forward from here, we made this, price should actually retrace here to fill some fair value gap and gain more strength before actually start to go up. Price never did that. That's why our market here has liquidity, as you guys can see, right? With that said, we start to go bullish. Here, we retrace. Why we retraced here? I don't understand, to be fair with you guys, because one of the things that grabbed my attention here was that, of course, first, we broke these highs. And those are very important highs. It's clear to see that we have a huge order block exactly right here, and price just swept it. So I was like, that's funny. Because, we just stopped on the demand zone and price just swept its first supply zone on 4-hour time frame. So that means that probably who is in control right now? Probably buyers, right? Because we were able to actually overlay, I don't know if that's the correct word to use it, win the sellers on this market. So buyers actually joined the market here very aggressively, and we can confirm it when we do this move. Well, but I was expecting that with this move up, we would retrace again to that one zone, or at least come back to this fair value gap or imbalance zone right here before we start to go bullish. Because I saw many times price never coming back on the zone you're expecting it to come, that is this first one right here. Many times when I'm trading, especially gold, okay? Many times I saw this happening. So I was like, okay, maybe price will never come back to this level. And if price never come back to this level, I need to optimize and find a way to actually, capitalize on this movement. So my idea was, okay, if price react on this zone and start to go up, okay, maybe we actually have something interesting in this zone. So I needed to mark it. I needed to select it because I want to pay attention for the next time price retrace to this level. Because as I said again, in my point of view, price should retrace at least to fill this fair value gap, or, actually come back to this first zone right here. And then start to go forward, start to go bullish again. Well, with that said again, we created a lot of liquidity all the way up. So we have structure and structure. Those lows have liquidity, as it's already here for you guys to see. Well, suddenly we made a new all-time high for gold. As you guys can see, this is a new all-time high for gold, right? So with this new all-time high, well, it's expected that some buyers, want to take profit. That's expected. If you are making a lot of money, at some point, you need to take profit in order to actually make money. Otherwise, you're just trading on paper trading. You're not making real money because you never close the position. Although it's not the same when you're losing money, because when you're losing, you're fucked. If you're losing money on a trade, the best thing you can do is actually close it and not holding it, Well, from here, we start to go down, and my suspicious was, factual. It was true. It wasn't delusional. Why? Because price stopped at this zone, and look at it. Look how beautiful it was. Beautiful rejection. From a zone, it shouldn't happen, right? We shouldn't have price on the level. But that's exactly what happened. And with that information, I needed to react. And again, I know you guys probably already hear this from many people on the internet, and they are right when they say that on the market, you don't predict the movement. You see the movement and then react to it. But think about it. If I want to predict the movement and say, no, price needs to come here so I can look for entries because I'm expecting these levels or even lower because I want this level to take the entries, I'm fucked right now. I'm fucked because I can't find an entry. Price will never come back to the level. So I was like, why? Why this on? Why? I even tuned on my volume and to try to understand. And the volume isn't nothing like unusual. It was something usual. Look, we have a lot of volume here, but we also had a lot of volume here. The same here. We have even more volume here. So nothing unusual, but one thing you need to remember is that you are trading gold. Gold isn't a usual pair. gold is gold. It's the most manipulated pair on the market by far, believe me. That's why many people are now ditching trading gold, even trading FX pairs to actually trade indices and futures, because you can see the orders, on the book of orders, and you can actually see who is buying and who is selling on the price point, or the price level. That's why many people are ditching trading FX pairs and trading gold or even silver, platinum to trade actually futures. I saw multiple traders, consolidated traders on the industry doing that. And I mean, I can do them. You just want to maximize the amount of money you can make. If I'm good trading gold, I will keep trading gold. I will stick to it. But if I wasn't profitable, maybe if I know that the problem isn't my strategy, it's probably the pair, or it's probably the time zone, or it's probably the session, or it's probably the entry confirmation. We have multiple levels of problems you need to solve in order to reach the holy grail that is become a profitable trader. You have multiple levels you need to scale, multiple problems you need to solve in order to become a profitable trader. And in this level, exactly, my idea was, okay, for some reason, price reacted to this zone and started to go up. I don't know why, but this level is definitely something abnormal, something unusual. But gold isn't a usual pair, so I need to mark it down and have it on my chart. So when price tapped on this level, the first thing I did, I never tried to look for entries. You know why? Because I'm not expecting price to react to this level. It's an unusual point. I don't want to take the entry when price reaches the level or trade or in other ways. Let's say the word started to fail my mind right now. I need to remember that I'm not a native English speaker, so sometimes the word just don't come to my mouth. Yeah. So I didn't took the entry when price reached the level, but when I saw a beautiful reaction on 15-minute time frame, a very beautiful reaction on 15-minute time frame, I tried to take the first entry, right? And if you guys pay attention, you guys will see that this happened on the middle of the New York session, at least for me, on 6 p.m. o'clock, it's on the middle of New York session, basically, right? I tried to take the entry. Guess what happened? The first stop loss of the day. That's exactly what happened. On the 25th of July, of course, not of the day, right? But, you understand the idea. The first stop loss of this whole idea of me trying to catch an entry that can, reach make a new all-time high. I took multiple other entries, intraday entries around here. I even shorted gold around here till these levels, till some level around here. But I'm talking about swing trades where I want to position myself in some strategic levels, right? Let me correct this light right here. Something wrong. There's something wrong with it. I don't know if something messed with it, but it's moving a lot and flashing, whatever. I hope it don't mess up with the image quality. Well, and that's that. Something interesting. One of my students I have in my mentorship was actually able to catch an entry, but not here. He was able to catch the entry around here. If I'm not wrong, it was on this little retracement right here. You see this week from this candle right here, not this big one, but the second, right? This. Let me see if I can make this bigger. So, okay, now, yeah, from this week, from this retracement right here, he was able to catch an entry at some level right here. Very beautiful trade. I'm not even questioning it. And he hold the problem from till some level exactly right here. It was like it was a swing trade, but he didn't hold it. He didn't have diamond hands enough to hold it till where I at least thought it would go. Well, with that said, you guys can see clearly the price doing what? Push, supply level strong as F. And what happened next? It's like a hammer, and we sent the market low in a very, very aggressive way. Fortunately for me and for my students, we were able to take multiple trades, especially especially around this area right here, between those two candles. You guys see those two candles, this candle right here from that opened at 2 a.m. and this candle right here that closed at around 6 p.m., 8 o'clock around this level. We were able to catch multiple trades around this level, multiple trades, okay? Because it was something actually that we were expecting to happen. Well, next is, okay, price start to melt, but you guys see the rejection here. Let me go to 1 hour time frame. And here it's even more clear why me and my students were able to, catch multiple trades here, right? You look, this was a clear trade opportunity also at 8 o'clock, and this one was at 5 a.m. 8 o'clock a.m., 5 a.m., okay? And you guys can see clearly the order block right here. And we just went to 5 seconds, 15 seconds, 30 seconds time frame after we saw the 1 minute time frame and find our positioned ourselves, and yeah, that's it. Well, price stuck on the zone and make a huge reaction, a huge rejection actually. Well, after that, we were all to the game. First thing, push up, retracement, push up, retracement, right? Put this in one, sorry. And then we have another internal structure here, but it doesn't matter. I just need to point there so it's clear for you guys also, right? So, push up, retracement, and that's the most important thing. Push up, break of all of the bigger picture internal structure, and from the small picture, let's say internal break of structure also. With that, I was able to do what? I was able to say, hey, that's interesting. Let me start to look for long entries now. And the first thing that came to my mind when I was looking for long entries is, okay, where can I find a 1 hour time frame imbalance? And that's why you guys can see here, I marked one imbalance zone, that is between the wick of this candle and the wick of this other candle right here. Now we can go to 15-minute time frame. And on the 15-minute time frame, you guys can also see very clearly that the first thing I did was to refine, let's say in this way, the level I was paying attention to it. So a 1 hour time frame, this is the imbalance. Let's go to 5-minute time frame. Scroll back. When you go to 5-minute time frame, you see why you have an imbalance on the zone. Look at this bearish candle. So, okay, it was my pleasure. What I did I place the entry exactly at those levels? No, because here I got a second stop loss. Let me show to you guys where. Because the first thing I did actually was trying to refine it even more. So this level right here, you see this on 3-minute time frame? This was the imbalance inside the 5-minute time frame candle, that is our order block or whatever you want to call it. And so, okay, I was like, okay, I think I found my holding here. I need now to wait for a reaction. But unfortunately, on 1-minute time frame, unfortunately, I don't want to share the 1-minute time frame, but whatever. Unfortunately, on 1-minute time frame, I wasn't able to find anything interesting, or even on the seconds when priced up on this level. So the fifth thing I did was, okay, you know what I will do? I will just place an order between this imbalance and this imbalance and protect my stop loss below the 5-minute time frame order block. Look at it. Where it is? Let me scroll back. So this is the 5-minute time frame. Why am scrolling that much if I can just do this? This is the 5-minute time frame order block, right? So I took the order and protect my stop loss below, right? So I'm like, okay, if it's stop loss, it is, but I think now we have a good trading idea and I'm all for it. Well, lucky me, this ended up playing very, very well. So well that I actually also took, let me scroll again, a second entry. Let me hide the first one. I hold I hide the second one. Sorry, no, I hide the first one because the first one have a bigger stop loss. And wait, let me hide it again. And the second entry, I know it may look I took it right here, but I actually took the second entry on the retracement on the week of this candle right here. Because if you guys go to 1 minute time frame, you guys will understand why. On the week of this 1 minute time frame, we had something very interesting happening. That was the candle, this candle right here on 1 minute time frame. It was able to fill a fair value gap zone, and I placed my order exactly at the fair value gap level. When price filled the fair value gap, filled also my order, and well, from here, this is history, right? From here, we can clearly see, like 15 minute time frame, for example. From here, the price just start to go up and up with no way back. We have, of course, little retracements along the way. And if I'm not wrong, at some level right here, let me show you guys exactly right here. I think it's at some level exactly right here. I ended up taking another stop loss, or I don't know. I don't remember if it was this zone or these zones, but I know I took 3 stop loss trying to capitalize on all this movement, try to go all the way up to the 30 minute time frame. Sorry, to the all-time high of gold, capitalize it, right? So I don't know if it was here or here. I delete all, sorry. So by default, by standard, I delete every single stop loss I take on the market. I delete from a chart because I don't want to look at it. I don't want to fix my mind on something back. I want to look forward to the good things that are on my way right now, for the good things that are in front of me, so I can chase them. I don't want to look to the back, look back, look to the mirror, and watch something bad I did in the past. I already learned from that. I want to go forward, right? I want to go in the right direction. So I usually delete that. Sometimes I post the stop loss I take, on my IG. By the way, you guys can follow me on IG. It's at link in the description. My handle is in the description, not the link, but the handle is in the description. You guys can follow me there. Because usually when I want to share stop losses, I share on my IG. I don't share it on I don't leave it on my trading view because I think they can actually have bad energy actually. So I don't want to look for my errors on a chart. Okay, now let's answer all the questions you guys sent me on my IG for the Q&A. Okay. By the way, follow me on my IG if you want to be here on the next Q&A that I will do here on my YouTube channel. Right. So the first question is from Ultra Venex. You stop to trade on prop firms. Why? Well, it's very easy to understand why I stopped a trade with prop firms. First, a lot of scam prop firms. I lost around, I think 4 accounts, 400k accounts on 2 prop firms. I think it was My Forex Funds and I think True Forex Fund. True Forex Fund was one of the best one, to be fair with you guys, okay? I really love to trade with True Forex Funds. And right now, I actually still have an FTMO account, but I don't trade there anymore. I go there a couple of times. I open some trades so I don't lose my account, but actually trading on prop firms, I don't trade anymore. And it's a reaction from all those scams I'm seeing around. I'm just tired of it. I don't want to, trade, make money, and then don't receive my payout. I don't want to place a stop loss on a certain level and then see my stop loss getting, let's say, not respected with a lot of slippage. I don't want to see clear market manipulation. This whole thing was just, make me very, very, very bad. I was like, okay, why I'm trying to win a rigged game? It's like, it don't make any sense. The second question is from JPSPARO. I don't know how to pronounce that. How do you do top-down analysis? It really depends on what's my target. If I'm trying to do swing trades, you guys will see me doing the top-down analysis. I will do the top-down analysis like the trade I just break down for you guys. So I will start on the daily time frame. If I want to trade intraday using the intraday strategy I mostly use to trade, that is the daily cycle trading strategy, what I will do, I will normally use just the 15-minute time frame, check the sessions, and then shoot my shot, So it's just, I have those two types of top-down analysis. The trade I just break down for you guys, where I started to trade and took hold this trade for weeks. I will usually start at what? At the daily time frame, and then go down till the 1 minute time frame, 3 minute time frame, whatever. But when I'm trading intraday, I'm just doing from 15 minute time frame. Sometimes I even go to 1 hour, okay, and beyond, and that's it. And lower, by the way. AZ underline ZZZ underline Z. You sent a couple of questions. I will try to answer all of those questions now. For the NAS 100, did you enter at the break of structure and wait? Sorry, let me repeat that. For the NAS 100, for the NASDAQ, why did you enter at the break of structure and not wait for the order block entry? I think you guys will understand, you and everybody that is watching this video will see why I enter at the break of structure when I record the trade, when I break down the trade, and it will be the next video on my channel. Okay, so it won't take that much time for you to, kill your doubt. What makes a break of structure or a chalk valid? For me, a chalk, a change of character, to be valid, we need to have what? We need to have a closure above the line, above the, how can I say that? How can I explain that for you guys? So let's say this is the level that if the next candle came, it will make a break of structure, right? So this is the line I draw, this is the high, and if price come here, we have a break of structure. If price come above, if price come above here, we have a break of structure. So I want to see the candle or the following candle closing above this line, above the limit, to make a valid break of structure. When it come a valid chalk, sorry, I mess up all the explanation. To have a valid chalk, I want to see the candle closing above, or the candle that actually broke, or the following ones. But to have a valid break of structure, for me, it doesn't matter. If it broke, doesn't matter if it's just a week, it is a break of structure. Although I need to remind you guys that sometimes you will have fake break of structure, but it's not because the closure of the candle, if it closed above or if it was just a week, it's because you didn't pay attention to the liquidity that the market is forming. So sometimes you will have break of structure and then price won't respect the demand level. That's why you're not paying attention. That will happen because you're not paying attention to the liquidity of the whole market as a whole, actually. Because we will break structure here, but just to strip liquidity and then continue going down or going up, whatever. So, the same guy sent another question. What makes a pullback valid? I don't know how to explain that to you, but I think the best way to have a limit, oh, this pullback is valid and this isn't, is if you push your Fibonacci tool and the pullback don't go at least below 60%, it's probably not valid. Okay, that's the let's say the standard explanation I can give to you. So I have a question now in Portuguese. Será que ainda é possível tornar-me teu aluno? Em português, infelizmente não. Let's continue to English. How did you start trading? I started trading back in 2015. I already explained to you guys. I became profitable back in 2019. And then from there, well, here we are today. I already recorded a video explaining my whole trajectory on my YouTube, here on my YouTube channel. So if you guys want to understand that, just check it out. So I have a question, I think in French, but I don't speak French, so sorry. It was Mateus _rec that sent a question, but I don't speak French, sorry. So what's your strategy? Well, at the same time, I already told you guys, I use intraday. I'm mostly using lit trading to select the zones I want to enter, but I also use the daily cycle trading strategy to find where to look for those zones. So lit trading, I want to enter in this zone, right? But to find in this zone, to know that in this zone, I want to find a lit zone, I use the daily cycle trading strategy. So I know with the daily cycle that, okay, now it's a good zone. It's a good time to look for lit trading zones to enter the trade. And when I'm trading on let's say, when I'm looking for swing trades like the one you guys just saw, I'm using mostly liquidity and inducement theorem, the lit trading strategy, but not to find the zone, to find the liquidity holds. And then I can say I'm using like a kind of SMC strategy to find some points where I want to enter. I know it's very complicated for you guys to understand, but I mean, it is what it is. It really depends on how you guys want to trade. Day trading, swing trading, intraday trading. That is the most, let's say, I would recommend to most traders, just do intraday. Don't go beyond that. Or scalping. It really depends. Okay. So now, what exact times are your favorites to trade, right? It's a question from Rezazadeh 53. Well, I really love, and I would recommend this for everyone that is watching this video. I really love to trade on the New York session start. Okay, when the New York session start, we have a lot of money, a lot of liquidity. You will have multiple trading opportunities, beautiful trading opportunities, and the market moves so fast that it becomes just the whole spot to find the best zones, or it's the best time to trade. So when the New York session start, I will stay there till like say 3 hours prior to the close, right? So I will start to trade from if you want to know the best time to trade, or my favorite time to trade, it's when the New York session start, and 3 hours prior the closure, I'm out of the market. Okay, so that's it. A question now from Ephraim Farahani. Where located your stop loss in two position? I think you are talking about the gold position, the bull position. So at this time you probably already know, so I don't need to answer that anymore. Ultravenex sent another question here. Can you tell me the best prop field to growing the best prop field to grow my own capital? Okay, the best prop field to grow your own capital without any doubts is FTMO. No question. Okay, it's FTMO. Just go with them. They are the best player in the market when it comes to prop firms. All the others one fail. The others one scam. I even got scammed, as I told you guys, but FTMO still here. They're still strong and, pushing boundaries in the market. Ultravenex, why do you stop the trade? I think that's it. I think I already answered all the questions you guys sent to me. I hope you guys enjoyed. Don't forget to subscribe and drop your like, and I'll see you guys on next video. Stay safe out there and make money in the market. See you guys.